Warning. This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel, and what a week it's been, frankly. What a week. It's finally Friday, so happy days. Going to be doing some relaxing this weekend for sure. Just before we get into today's episode, I wanted to ask, I don't do it very often, but please can you hit the subscribe button if you're not already, because we are rapidly approaching 15k subs, which is of course a huge milestone for the channel. So if you're not subscribed, please do that. The other thing I wanted to point out is exchange disclosure, and I've covered this once or twice, a handful of times, but it has been a little while and there's plenty of new subscribers since I've done this. So once you build up a small following in this space, exchanges, needless to say, reach out to you and say things like, hey Camel, like, can we have a partnership? Will you shill our exchange referral link in the description to your videos, so on and so forth. And wholly speaking, I just say no every time, right? And the reason I say no is I don't really agree with it, right? It's one thing for me to sit here and say, oh, look at my trades in profit, look at this, blah, blah, blah. But I don't really think it's my place or the place of any YouTuber to encourage people to click a referral link and say things like, yeah, click that, I get a kickback, and then you can trade and make money just as easily as I do. That's not how the real world works, right? The real world works as a burn and churn industry. That's what this is. So the reason they are willing to pay me large sums of money, I'll tell you about the money in a minute, is because they know that at least 70 to 80% of the people that click those links will deposit their money and then blow up their account within a few trades. And thus, I've always stayed away from it. I don't really want that overhanging. Also, a lot of people often ask me what I use, what broker I use, or what exchange I use for my trades in general. And as a rule, I never recommend any. I think everyone should do their own research, make their own decisions. And if I was to say, this is the company I use to do my stock trading in, and then it was to collapse, well, that's bad enough that I'm going to lose my money, but I really wouldn't want that hanging over me if I said to somebody, yeah, sign up to this, or I use this broker, and then it collapsed and the worst should happen. So as a rule, I've always stayed away from this. But from time to time, I like to point out a few details, right? So the more I say no, and the more followers I get, the more that instead of the people that work for these exchanges reaching out to me, they start to refer it to the CEO. I've even had a couple of CEOs reach out to me of late, and some of them are offering as much as $10,000, right? They've offered to pay me $10,000 and then give me a referral link to shill to you guys. And how it would work is you would click that link, I would get a kickback, and then every trade you make, I can slurp some of your fees. So if you pay $2 as commissions and fees per trade, they'll give me like between 10 and 40 cents of that every time you make a trade. So the reason I'm sharing this with you is largely just because you otherwise might not get to see it from this side, from the creator's side. But I've also had twice, and this is the main reason I wanted to flag this, people offer me simulated trading accounts to flash in front of you guys. Now, this is where this whole exchange thing starts to get really shady, in my humble opinion, right? Like I said, it already doesn't sit right with me. But at least twice now, I have been offered a sim account or a demo account. So this is where they give me what looks to be a completely normal and legitimate exchange account, but it is funded with $10,000 or $20,000 worth of fake money, right? And then they were going to allow me to, number one, trade without putting any capital of my own at risk, which is a huge red flag. And the second thing is, once I've placed a bunch of demo trades, right, seemingly real, but demo trades, and I've perhaps got tens of thousands of pounds of open profit sitting on my screen, I can then use that to flash in front of my subscribers and say, look guys, currently sitting in a whopping X amount of pounds of profit. If you want to do this too, click that exchange referral link. I get a kickback, you get a sign up bonus, and then you can blow up your money and lose your hard earned capital. And all of this, right, will be entirely fake. So the numbers that I would be flashing on the screen, look how much money I made, £60,000 on this one trade, it would be complete BS. It wouldn't be my own capital. I wouldn't be able to withdraw it. It would be a demo account that is being presented as a live account. And so the reason I'm just letting you know that this goes on inside the industry is so you can just be aware of it, right? Armed with this knowledge, if you are watching other YouTubers that are hard shilling, they're hard shilling their referral links, and they're not very good at calling trades out ahead of time, right? If they are good at telling you after the fact they've got a bunch of open profit, just be aware that in some of those cases, that profit might not even be real profit. They might not actually be capable of trading at all. And I would suggest that in quite a few of these examples, these people don't make any money trading whatsoever. In fact, the bulk of their income probably comes from poor suckers on YouTube clicking these referral links and blowing up their accounts. So I just thought I'd share that with you because knowledge is power, okay? So armed with this new knowledge that you can see from my perspective rather than from the viewer's perspective, just be mindful out there, okay? Be mindful, trust no one, least of all me. And I'm sure as the channel grows, I will be able to reveal some more of these insider secrets for you. So do hit that subscribe button, get me to 15k, and thank you very much. Right, in the meantime, let's get into this. First of all, I saw this, okay? So if you're long Solana, if you're bullish Solana, okay, this is not something that I would think would make you very comfortable. Fitting in with yesterday's episode where I was essentially putting the Fed on blast and telling everyone that I don't trust a single word that comes out of Jay Powell's mouth. I then found this, okay, perfect example. Bernanke came out and said the Fed is not forecasting a recession. Look at the date, January 17th, 2008, okay? So just a couple of months before we went full bore GFC, the Fed was sat there saying that there's no recession in sight, okay? So this has always been the case. It's not a personal attack on the current chairman. Also, speaking of this sort of lack of credibility, did you notice the Fed on Wednesday raised the inflation targets, only for PPI to come out the following day, significantly colder than expected, right? Negative 0.2% PPI month over month. So pause your screen, take a good look at this. It fits with the idea of continuation of disinflation before ultimately a slip into asset price deflation, which of course tells us to be open at least to the idea of seeing rate cuts ahead of what most market participants are expecting, and so does the unemployment rate, okay? We currently have the unemployment rate 0.6 above the cycle low. And in the last 4 cycles, excluding the C19 period, when the UR, the unemployment rate, was up 0.6, momentum began to take over and it rose rapidly from there. So you can see 1990, we hit this magical 0.6 or 0.7, and then unemployment goes through the roof, right? Same here in 2001, same here in 2007. Where are we today? At that exact same 2007 level, telling us to keep an open mind about seeing an accelerated spike in the unemployment. And of course, that is synonymous with recessions, with premature rate cuts. And by premature, I just mean ahead of what the Fed has been telling us will happen. I actually think they're already late to cut. They were late to hike and now they're late to cut. And that's just how the Fed works, unfortunately. Meanwhile, DT is out here proposing the elimination of all income tax and replacing it with tariffs on imports if he is elected. So is this something that is likely, or is this just more talk in order to try to win over the voters? I'll let you be the judge of that. It's an interesting idea, though, because the requirement to have everyone pay tax, 1, keeps the peasants poor, but 2, it also creates the illusion that the government has some kind of funding, right? And it draws people's attention away from the fact that the way the government actually is funded is through treasuries. And of course, how does it get those treasuries? Well, the central bank buys them with printed money. So the real reason we have income tax, apart from to keep the peasants poor, is to also uphold an illusion that the government is funded by the people as opposed to just prints money, buys treasuries, adds them to the Fed balance sheet, so on and so forth. So it's a wild time to be alive. I hope you have considered getting yourself some kind of exit. MicroStrategy is out here about to raise another $500 million in stock sale to buy more Bitcoin. Okay, so this is absolutely wild. I really hope this works out, but the more he does this, the more I start to get a little bit concerned, if I'm being completely honest. Over in Brazil, their largest bank has just launched the ability to buy and sell crypto to its 60 million customers. Gradually, then suddenly, indeed. And I've found this chart, which I've never seen before, but it's pretty cool. In the purple, we've got the supply in loss for Bitcoin, and in the pink, we've got the supply in profit. What you'll notice is when these diverge away, okay, when they widen, the jaws of these two things widen and trade sideways, we find bottoms. And then they converge, as you can see here, till they squeeze together and trade in a range. During that trading range, we see Bitcoin do Bitcoin things. Then again, we see, as I'm sure you can tell already, the widening, right, the divergence, before a sideways range, and that is synonymous with bottoms. And this pattern repeats all the way through. And where we are today is very similar to here and here, right? These two circles, which of course coincided with Bitcoin doing Bitcoin things. At the hard right edge, a very similar setup. If we can maintain this look before this look, it tells us to keep an open mind about higher than expected Bitcoin prices walking forward. And speaking of keeping an open mind to higher Bitcoin prices, there's only one time in Bitcoin's history, other than today, when we had tighter 5-day compression, and it was 12 years ago, back when Bitcoin was trading at $5 per Bitcoin. Take a look at this, okay? Major compression on the 5-day. And of course, historic compression precedes historic expansion. Now, of course, if we're being honest, it does not predict the direction, okay? But it does tell us that when this move comes, it will be violent. I'm also noting from a sentiment point of view, most people that I see in my comments, I know probably the people that are more positive just don't say anything. They just probably sit back and chill. But I'm seeing an awful lot of people saying there's absolutely no way we can top as early as I think we might, right? There's absolutely no possible way that July, August, or September, October is the top. We have got to go on for many, many more months before that. There's got to be 18 months of bull market left. This whole price action has led many people to be in the comments saying things like, Camel, this is nonsense because we still haven't broken the all-time high. But to that, I simply say, you don't really know what you're talking about. Consolidation for 15, 16 weeks around the prior all-time high level is bullish, not bearish, okay? Reject and move lower, then we can start to talk about breakdowns. Then we can start to talk about potentially having some kind of triple top in play. But the facts are the facts, okay? This is a bullish setup. We are consolidating around the prior all-time high level, building a base before historic expansion unfolds. Again, we have to be open to all possible outcomes, including a historic crash. But this is a bullish setup, not a bearish setup. Meanwhile, something else that has historically been bullish for Bitcoin are bank failures. And the banking crisis is getting worse. It's getting a lot worse. We've got another 100 million in rescue. We're going from naught to hundreds of millions in bailouts every couple of weeks. And soon this is going to be in the billions. This is also another reason the Fed needs to step in and cut rates, because it's the rates forcing the bonds into unrealized losses and the CRE exposure that is causing, or at least is a large contributing factor to this. So not necessarily a good look. But historically speaking, bank failures and bailouts have been very bullish for Bitcoin. I wonder if we could see something like this act as a catalyst. And the last couple of things I wanted to point out was, one, silver, as you can see here, right? It has a prior all-time high of around $50. But I didn't know this until today. If you adjust it for inflation since 1988, the real inflation adjusted all-time high is $806. Okay? So to say that we can't go 50, 60, $100 seems pretty crazy, right? Like I said, inflation adjusted. We've got an $806 target just to all-time high after inflation. Now, am I saying we're going to go there? No, but it's a pretty interesting idea, okay? Maybe, just maybe, not enough people are bullish enough on the precious metal markets. That does not change the fact that moving into the charts, we are still due a weekly cycle low mid to late July. That is where I'm looking to get back to full exposure and allocation. The stock market still seems to be thinking about confirming a third angle. I would love to see it have some kind of flush before it can go, just to build a little bit more structure. But if this thing's going to continue to rip, then long and strong there. Same deal for the NASDAQ, right? Looking suspiciously like third angle territory. The Dow Jones is the only one behaving how we'd kind of expect it to behave at the moment. So we'll see. I think the best case scenario is we do get some big, violent red sell-off to end the week. That will really flush this down, reset the sentiment. Everyone will be like, that's the top. But that will be a perfect cycle low time frame to take advantage of next week on swings. So looking out for that. I'm sort of hoping, and I can see the VIX is creeping up. I'm hoping what we get is not VIX Crush Friday as we normally get, and instead we're going to get a nice big red shakeout to really induce panic over the weekend. That will make all the bears and stuff be mulling that over the weekend, really getting into a fear state right in time for the cycle low. So that'll be the perfect setup. Hopefully we can get that. Bitcoin still doing a whole heap of not a lot, right? Still doing a whole heap of nothing, still boring everyone to death. Seeing a lot of people, as I said, calling this a bearish setup, and I really don't think that's the case. And something else that I think is perhaps a little glimmer of hope here is, if this is the early cycle low from back here, well, we're not that far away from another cycle low. We're something like 2 weeks away from potentially finding a cycle low. And if my current count is correct, then we might only be, 3 weeks away from finding the next cycle low, somewhere in that neighborhood. So we'll be on the hunt, we'll be on guard for an early cycle low and open to this being an early cycle low from back here. So I'll be looking out for that. I do think if you're a bear here, really the best you can hope for, the absolute best, is something like this. That's what I think the best you can hope for if you're bearish here. But again, I like what I'm seeing, because we're seeing sentiment be completely wiped out. I'm seeing a lot of people say, oh, there's no way this thing is going to have a big squeeze to the upside. There's no way it's going to move into price discovery. I'm even seeing people make weird excuses for Bitcoin, where they're saying, well, inflation adjusted, it's not even made an all-time high yet, Camel. And that's true, right? Objectively, that is true. But also, do you do that for every other asset? Has the Dow Jones made an inflation adjusted high, right? Why are we treating Bitcoin differently? Why are we throwing that around as if somehow we're trying to devalue what Bitcoin has achieved, which is a new dollar all-time high before the halving? So again, I suggest to you that consolidation around the prior all-time high level is actually bullish rather than bearish. And even if we do start to see a sell-off, we're getting dangerously close to a cycle low timing window. And if we get that, then what we would have had is plenty of consolidation for a full 2 cycles before we then got perhaps as well a weekly cycle low to form and a big upside squeeze. In the meantime, it would really only take a bank collapse to send this to Valhalla. So we're going to find out soon enough, of course. If the dollar keeps on doing dollar things, right, then again, this is all kind of pointing to deflationary bust territory again, isn't it? We're still refusing to break down. I see an awful lot of people calling for a lower dollar. It's going to really have to start moving quickly if that's the case. And this is the 10-year yield, okay? Again, I say tell it to the bond market. We're going to come back over the weekend and do the deep dive as always. Also, US 2-year yield starting to look exactly as expected, right? So if you know, you know. If you don't, come back tomorrow over the weekend and look at the deep dive. Deep dive's going to be pretty good this weekend since we got some significant updates and things continuing to move in our favor. Other than that, I hope you're doing well in life. I hope you have a fantastic weekend. If you're a level 3 member, look out for the members only video that's coming tomorrow after the deep dive. For everyone else, hit that subscribe button. Come back tomorrow for the deep dive, as I said. And in the meantime, I will leave you with the 3rd song on the coming Camel Finance AI album. Thanks again to GizmoXXL/Sheepherder for putting this together. And until next time, take care from me. All the best. Cheers. Bye.
Money makes the world go round. In the fantasy, what happened? Well, let's stop turning. Let's find out. Stealth QE for the banks. Rates need to stay high. Changing the CPI data, insist it ain't a lie. Misdirection by the media, keep everyone in line. Get yourself another loan, everything will be just fine. Oops, tax increase, peasants, how do you feel? Cost of living still okay, or can't afford your meal? Oops, credit delinquencies, reach for the sky. Don't you dare to stop and think that this cake might be. Just work 3 part-time jobs on benefits, try to make ends meet. You don't need a steady one to buy that mansion down the street. Some buy mortgages in a CD, or pension funds will gobble up. And when the housing market does implode, bailouts will hit like a truck. Oops, tax increase, peasants, how do you feel? Cost of living still okay, or can't afford your meal? Oops, credit delinquencies, reaching for the sky. Don't you dare to stop and think this cake might be a lie. No lie. Let's rationalize rampant shoplifting, make skin color a perk. Blocking all streets for climate change, people can't get to work. Endorse mostly peaceful protests, expecting shops to stay. Won't let you cry about the prices when they eventually move away. All the banks are safe and sound, nothing will go wrong. Jobs gotta looking mighty fine, economy holding strong. Stocks going up while producing less, putting on a show. All but 3 companies in the S&P, thanks for the carry, bro. Oops, tax increase, peasants, how do you feel? Cost of living still okay, or can't afford your meal? Oops, credit delinquencies, reaching for the sky. Don't you dare to stop and think this cake might be a lie. No lie. Camel Crew, don't get fooled, there's some crazy times ahead. Best to stay indoors for a while and focus on the windows instead. Stock up on supplies, tell your close ones to do the same. Touch grass when in doubt, put your hands up and put the future in a frame. Oops, tax increase,